Hello everyone, welcome to the market snapshots for today. So Nifty is pretty much there where it was in the last session at 24,625. Slight bit of movement in Nifty 500 at 23,675, and Nasdaq 100 is down by almost 1%, and S&P 500 is down by 0.17%. So I think pretty much very stable kind of a day. I think markets are working in tangent. One day the Indian market is supposed to rise, and the other day the US markets. That is what they are doing. Uh, of course, with a lot of volatility in place. So this is Nifty 500. The advances were 278 against declines of 222, and new highs were 14 against new lows of 486. And the breadth has improved for sure. Above 20 MA 311 stocks, above 50 MA 316 stocks, above 200 MA 294 stocks. And the chart is looking good. This is Nifty 50. I mean, the trend for sure has changed. This zone has been breached. So overall, the structure is looking good. And I think the sentiments are moving towards larger caps. So mostly we'll see Nifty 50 keep rising. And this is Nifty 500, similar kind of story, trading almost at its all-time high. The trend looks good. The chart has finally broken this zone, and the next hurdle lies somewhere here at around 24,000 levels. And most probably, the way things are, it might breach that too. So, Indian markets, like I said, I mean, like I have been saying, see, globally, if you look at this point of time, the best looking markets are Indian market. It is just that dollar has been putting a lot of pressure. But fortunately, if you see dollar in throughout last week, or maybe even in this week, dollar has started going down. And dollar is, I mean, most of us perceive that dollar is a problem only for maybe Indian markets or emerging market, but that's not the case. Dollar is a problem for US itself. A rising dollar doesn't allow US, to put in more money in their own markets. Uh, it makes European markets expensive. So a rising dollar is not good for anyone. I mean, see, markets are all about trades, markets are all about business, and the moment dollar starts rising, the business becomes expensive, and that is when people are not looking for those kind of opportunities. So that is very problematic. And fortunately, last entire week, or maybe this week, once the dollar started falling, that has helped the equities market all across, and that is the same reflection we are seeing in the charts or maybe in the numbers. So overall, how does the Indian markets look? Nifty 50 bullish, participation is mixed, breadth is strong. Nifty 500 bullish, participation is mixed, and breadth is strong. So how are we supposed to trade in the Indian markets? I would say, see, if you are holding on to position, continue holding with your stop losses. You want to enter now, maybe 50-60%, or maybe you can go for an exposure of almost 75% in the Indian markets at this point of time. Gradual increase of exposure is what is needed. Don't go all in if you are getting in today. uh, Not because the markets are weak, but I think the markets are volatile. I mean, any rise and fall in the dollar will definitely have an impact, and then eventually you'll get chopped out. So that is the reason I'm saying maybe an exposure of 50 to 75% in Indian markets is good to have. This is S&P 500, 247 advances to 2453 declines. So the follow through of the previous session was not as strong as yesterday, but again, it is terrible. It is still uh, much better looking start for the US market this week compared to what all happened in the last week. And the new highs are 16 against new lows of 484. And the breadth for sure, I mean, this has deteriorated a bit, but then it looks very very strong to me. Above 20 MA 316 stocks, above 50 MA 327 stocks, above 200 MA 344 stocks. So very very strong going for the S&P 500. This has been my favorite index, I think, from last couple of months. The reason being the numbers are not falling. A lot of liquidation which might have happened from the semis or the technology has come back to larger cap techs or defensive sectors in the US market, and that is the reason S&P 500 looks like really very lucrative. At the same time, let's have a look at the charts. So this is Nasdaq 100. A good positive looking bullish chart. I mean, it has reclaimed its 50 EMA and the numbers are backing the rise. Till the time they keep backing the rise, I think we are fine putting in our bets. And this is S&P 500 trading at its all-time high. A very, very strong looking chart, very, very good supportive numbers to the rise, and this remains my favorite pick. And this is Russell 2000, very similar story to what S&P 500 is doing, trading at its almost highest level. The numbers are volatile here, so that is the reason I am saying, see, why not, like, if everything in the US market has started looking good, why not Nasdaq 100 or Russell 2000, and why only S&P 500? Because what happens is, I think the rise is universal for sure, but then I think the numbers are not very supportive. For instance, I think Russell 2000 was very volatile in yesterday's session, and for Nasdaq 100, unless and until this is breached, I don't think this will have enough momentum in it, although it is doing fine. But then if you are looking for short term trades, maybe you can look for opportunities, but at all, you if you're planning to hold on to maybe few weeks, few months, maybe this might not be a bet. That is the reason I have not been telling to get into Nasdaq 100. Whereas what happens in S&P 500, see, it's already breached the highest level, and the data and the numbers are in support of this rise. So that is the reason I feel this is a much better bet. Here what is happening, although it is also trading at its almost at its highest level, the breakout had happened but it has come down. The second problem is, the numbers supporting to this rise are very volatile. That is the reason the favorite or the most lucrative bet at this point of time looks S&P 500. So the overall summary from the US market: Nasdaq looks bullish, participation is mixed and breadth is strong. S&P 500 bullish, participation mixed and breadth is strong. Russell 2000 bullish, participation weak and the breadth is strong. So that is what I have been saying at this point of time. See, these two look very similar, Nasdaq 100 and S&P 500. The reason, I would still bet on S&P 500, because I feel a lot of liquidation is happening from Nasdaq 100. At the same time, if you look at this chart, has already given you a breakout of its all-time high, whereas this is still struggling. And like I said, Russell 2000 is volatile, so there's no point of getting into this section. And I can assure you, at this point of time, be it India or the US market, a lot of liquidity is moving towards larger cap tech or maybe defensive sectors, and that is the reason maybe small cap would not be one of the best bets even in the Indian markets, not only US markets. A lot of people feel this, the current momentum in the Indian markets will be carried away by micro caps and small caps. That is how it started, but somehow that is not what is supportive at this point of time. I think a lot of liquidity even in Indian market is moving towards larger cap companies. So what is the overall market saying? So yields have also fallen a bit. I mean, they made a high of almost 4.78. Now come back, they have fallen back to 4.61. For sure, this is helping the equities to rise. Dollar is helping equities to rise immensely. I mean, dollar has been going down, so that is also helping. VIX at 16.81 suggests neutrality, but then I feel markets are not neutral at this point of time. BTC at 64,640. I think BTC is getting accumulated at around these zones. It is watch out. I mean, I'm not someone who would enter at those levels unless until the trend completely turns around. uh, Gold has been very, very strong in the last session. Like I said, gold was getting accumulated by a lot of central banks, but at the maybe I'll just look in the charts and tell you. So this is dollar. This is, I think, what is helping the rise of the equities. This dollar has been falling, and I think that is a good news. Markets all across the Indian markets, the European markets, the Southeast Asian market, or the US markets itself. Bitcoin, like I said, I think this is a very strong accumulation zone, because prior, if you see, what was happening, there was a lot of volatility here, but here if you see, uh, this looks a very smooth looking. So for sure I feel there is a lot of accumulation happening at this point of zone, but at the same time neither I will predict nor anticipate a breakout. That is when I'm interested in Bitcoin for long term. Short term opportunities every day available at Bitcoin. I think this was yesterday the strongest looking chart. This is gold. A very smooth looking, consolidation was happening. A lot of macro players were interested at around these levels. A lot of banks were accumulating at these levels. But like I said, I'm not interested. See, I'm not someone who would want to rise from this bottom to whatever top it makes. No, I'm not interested in that. Somehow, I don't have that kind of skill also that I can literally pick up the bottom and the top. That is not how I work. I mean, I don't mind, maybe getting it somewhere here, and then maybe if this is the top, getting it somewhere here. I mean, if I can have my share of meat, I am happy. If the runway is maybe of $100, I'll be interested in getting those 50, 60, and I think that really helps me. I really am not interested in getting into every pie of that $100. Strong looking chart, do I enter today? I would not enter for sure. What I would look for, if I want to trade gold, maybe I will look for short term opportunities, intraday opportunities. But for my positions, what I would expect is I would want gold to rise a little bit, flatten a bit, and this change in trend happens for 50 MA. That maybe somewhere here 4400, 4500 levels is where I would be interested in getting into gold for maybe swing positional or little long term. But at this point of time, gold is just maybe short term trade for me. Already it has already given a breakout, but it's still, like I said, for me, I mean, I pay a lot of attention to the technicals as well, and that is the reason I feel that is how I will play this bet. So overall, what are the markets saying? So I think markets are very strongly telling us, don't try to anticipate, don't try to predict, follow me, and that will be good for you. And I think that is the right approach about the markets, because see, the thing is, either you have so much of liquidity that you can move the market, that is when you should be anticipating or predicting. And if you don't belong to that league, I think the best bet is follow, study what markets are doing, and I think just be a follower, and that really helps you. I mean, I think that is more than enough to make a living in the markets, and that is what I would say. So the final takeaway about the Indian markets would be, have an exposure of around 50-75% if you are a new entrant. If you are already in, don't worry about it. Just keep holding to your positions with your stop losses. US market, I think very similar story. If it is S&P 500, I would say you can. If you are a new entrant, go with an exposure of 50 to 75%. Uh, if you are already holding on to positions, I think again be little conservative. Just look for your stop losses and just keep following the market. Gold, I think this is where a lot of opportunities would be coming in, be it in day trading forms or maybe little swing or positional forms. And Bitcoin at the same time, like I said, I think that is also getting accumulated, but I think it is a wait and watch for me in terms of swing or positional. But day opportunities for sure are available. So yeah, that's everything from my side. I hope you all found this useful. Thank you so much and have a good one. See you next time.